Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets behind massive corporations. This week we're peeling back the curtain on Federal Home Loan Bank of Chicago's latest filing. And let me tell you, it's not just about numbers, it's about the pulse of a financial giant powering mortgages and housing across the nation. So what exactly is this report all about? Well, think of it as a snapshot of significant events at the Federal Home Loan Bank of Chicago, or FHLBC for short. This particular report is all about the big bucks they raise by selling what are called consolidated obligations. These are basically bonds and notes they sell to investors to get the money they need to lend out for things like, you guessed it, home loans. It's like the bank is borrowing money from the public to help other people buy houses. Now, the FHLBC is a bit of a unique beast. It's federally chartered, meaning it's a corporation created and overseen by the federal government. Its main job is to support the housing finance system in its region. They get their funds by issuing these debt securities, and these aren't just small potato stuff. These get sold in the big leagues, the capital markets, to a wide range of investors. The core of this filing is about the actual debt they are issuing. The FHLBC gets its funding from selling something called consolidated obligations. These are like special IOUs that are actually the responsibility of all of N federal home loan banks working together. So if one bank can't pay, the others have to chip in. This makes them a bit safer for investors because it's not just one entity's word that counts, it's a whole system. And this is where it gets really interesting. They've provided a detailed list, a schedule of these consolidated obligations. Think of it as a menu of loans they are taking out. Each entry is a specific bond or note showing when it was issued, when it's due, and how much it's worth. They're essentially telling us who they're borrowing from and on what terms. Let's dive into the numbers here. On July 9th, for example, they issued a bond with a CUXQK7. It's non-callable, meaning they can't just decide to pay it back early, and it has a fixed rate of 4.75%. The amount on this one, a hefty $15 million. Then on the same day, July 9th, they had another issuance, CUSP 3130B72J2. This one is a bit different. It's an optional principal redemption, meaning the bank can choose to pay it back early on certain dates starting in April 2026. It's a fixed rate bond at 4.25% and also for $15 million. This gives the bank flexibility. If interest rates drop, they can pay off these older, higher interest bonds and issue new ones at the lower rate, saving money. Another example from July 9th is CUSP 3130B72P8. This is also an optional principal redemption bond, but this one has a longer maturity, maturing in 2036. It's a higher rate at 550% and a much larger principal amount of $30 million. This shows they are borrowing for the long haul on this one. And who's signing off on all this? Well, it's a Vice President, Michael Palumbo, on July 15th. This is the official seal of approval on these financial commitments. So what's the story here? The FHLBC is actively managing its funding by issuing new debt. They're securing significant amounts of money, diversifying their maturities and interest rate structures. They're using a mix of fixed rate bonds and some that are callable, which is smart financial management. They're clearly in the market for substantial funding to support their mission of providing liquidity to member institutions for housing and community development. Now let's look at the overall financial picture and what this means. The FHLBC is essentially in the business of borrowing short and lending long, or borrowing at one rate and lending at another. The rates here, ranging from 4.25% to 6%, are indicative of market conditions at the time of issuance. The fact that they are issuing bonds with maturities stretching out to 2 to 45 shows a long-term view and a need to lock in funding for extended periods. The key takeaway from this filing is the sheer volume of debt being issued. We're seeing millions and millions of dollars being raised through these consolidated obligations. This highlights the FHLBC's critical role in the broader financial ecosystem, ensuring that there's money available for mortgages and housing finance. From a Warren Buffett-style perspective, we're looking at an institution that operates in a regulated environment with a clear mission. Its strength lies in its diversification and the collective guarantee of the federal home loan banks. The risks are always tied to interest rate movements and the overall health of the housing market. However, the ability to issue different types of debt, like callable and fixed rate bonds, shows a sophisticated approach to managing these risks. The FHLBC appears to be executing its funding strategy effectively, securing the capital necessary to fulfill its mandate. There are no major red flags screaming from this particular report. Rather, it's a standard, albeit substantial, operation of raising funds. The key for them moving forward will be continued adeptness in managing interest rate risk and ensuring the quality of loans made with these funds. Alright, that's our breakdown of the Federal Home Loan Bank of Chicago's latest filing. What are your thoughts on their funding strategy? Do you see any particular risks or opportunities that we might have missed? Let me know in the comments below. If you found this deep dive helpful, please give this video a like. It really helps the channel out, and subscribe for more corporate decoder sessions. And don't forget to join our growing community on Discord. The link is in the description. Thanks for watching, and we'll see you next time.